The dark side of wealth building. 10 risks you need to be aware of. Hi everyone, let's understand about 10 risks you must aware of. 1. Market volatility risk. 2. Lack of diversification risk. 3. Fraud risk. 4. Inflation risk. 5. Liquidity risk. 6. Currency risk. 7. Concentration risk. 8. The sequence of returns risk. 9. Behavioral risk. 10. Legacy risk. Now let us understand each risk in detail with an explanation. 1. Market volatility risk. The risk of losing money due to fluctuations in the stock market or other investments. Market volatility risk is a significant concern for anyone seeking to build long-term wealth. Investments in the stock market or other volatile markets can be highly profitable, but they also come with the risk of losing money due to fluctuations in the market. This risk can be mitigated by diversifying one's portfolio and investing in a variety of different assets, including stocks, bonds, and real estate. It's important to remember, however, that no investment is completely risk-free, and it's always important to carefully research and analyze any investment opportunity before committing to any funds. 2. Lack of diversification risk. The risk of having all your wealth tied up in one type of investment or asset. The lack of diversification risk refers to the danger of having all your wealth tied up in one type of investment or asset, leaving you vulnerable to potential losses. For example, if you invest all your money in a single stock and that company experiences financial difficulties, the value of your investment could plummet. To mitigate this risk, it is important to spread your wealth across a range of investments, such as stocks, bonds, and real estate. Diversification can help protect you against the fluctuations of any single asset class and increase your chances of achieving long-term financial security. 3. Fraud risk. The risk of being scammed or defrauded by an unscrupulous individual or organization. Fraud risk refers to the potential danger of being deceived or cheated by an unethical individual or entity. Scammers use various tactics to trick people into giving them money or sensitive personal information. This could include fake investment schemes, phishing scams, or identity theft. Falling victim to fraud can result in significant financial losses, damage to credit scores, and emotional distress. To minimize the risk of fraud, it's important to be vigilant and cautious when receiving unsolicited emails or calls, and to always verify the legitimacy of any investment opportunity or request for personal information. 4. Inflation risk. The risk of losing purchasing power due to rising prices. It is the potential loss of purchasing power due to rising prices of goods and services. As inflation rises, the value of money decreases, and it takes more money to buy the same goods or services. This can lead to reduced buying power and financial strain for individuals who are not prepared. Inflation risk can affect all aspects of personal finance, from savings and investments to debt management and retirement planning. To mitigate inflation risk, individuals can consider investing in assets that tend to keep pace with inflation, such as stocks, real estate, and commodities. Additionally, it's important to regularly review and adjust personal finances to stay ahead of inflation and maintain long-term financial security. 5. Liquidity risk. The risk of not being able to quickly access your money when you need it. Liquidity risk can be a major concern for individuals who need quick access to their money. This risk can arise if you have too much of your wealth tied up in illiquid investments or if you don't have a proper emergency fund to cover unexpected expenses. In some cases, you may need to sell your investments at a loss in order to access your money quickly, which can have a negative impact on your long-term financial goals. 6. Currency risk. The risk of losing money due to fluctuations in exchange rates between currencies. This risk is particularly relevant for individuals who invest in foreign assets or who travel frequently to countries with different currencies. Exchange rates can be volatile and unpredictable, which can lead to unexpected gains or losses on your investments. 7. Concentration risk. The risk of having too much of your wealth tied up in one particular company or sector. This can be a problem if the company or sector experiences a downturn, as your entire investment portfolio could be negatively impacted. Diversification is key to mitigating concentration risk, as it involves spreading your investments across different companies, sectors, and asset classes. 8. Sequence of returns risk. The risk of experiencing poor investment returns early in your retirement, which can have a major impact on your long-term financial security. Poor investment returns early in retirement can have a major impact on your long-term financial security, as you may need to withdraw more money from your portfolio to cover living expenses. This can lead to a situation where you run out of money later in retirement, which can be devastating. 9. Behavioral risk. The risk of making emotional or irrational decisions based on fear or greed, which can lead to poor investment choices. Behavioral risk is the risk of making emotional or irrational decisions based on fear or greed. This risk can lead to poor investment choices, such as selling investments during a market downturn or buying into a hot investment trend without doing proper research. It's important to remain disciplined and stick to your long-term investment plan in order to avoid behavioral risk. 10. Legacy risk. The risk of not properly planning for how your wealth will be distributed after your death. Legacy risk arises when you don't properly plan for how your wealth will be distributed after your death. This can lead to family disputes and legal challenges, which can be costly and time-consuming. It's important to have a comprehensive estate plan in place that outlines your wishes and ensures that your assets are distributed according to your wishes. Hope you understand these risks. Please be careful while accumulating wealth and avoid these risks. Please like, share and subscribe to our channel to know more about personal finance.